When it comes to trading and investing, people always talk about this thing called technical analysis. But really, what actually is technical analysis? Like, really, what's it stand for? And maybe more importantly, does it even work? Let's find out.
All right, let's start very basic. Technical analysis, it's a method used to evaluate and forecast the future price movements of financial assets. That can be equities, stocks, commodities, cryptocurrencies, and essentially just the study of price and to some extent volume as well. So instead of looking at a company's fundamentals, we just look at charts like this. There's a few factors involved in technical analysis, so let's look at those here right now. So when we talk about technical analysis, we're talking about several key concepts. Number one, price charts. Again, we can make an educated guess around the future movement of price based on price charts. We can have several different types of charts. We'll talk about that in a minute. Trends, which is just something we read out of the charts, so everything starts with the charts. Then what's important is finding support and resistance. Then we can add some technical indicators, and of course there are things like chart patterns and ultimately even volume.
So technical analysis is actually a very simple concept. It's really just essentially the study of price movement and really human behavior, human emotions. So let me show you this chart here. So you're looking, for example, I currently have a little trade on here in the futures in the S&P 500, and you can see the price behavior here. There's a bunch of stuff on here that I'll talk about in a little bit later, but essentially what you're seeing is the price behavior. And not only can we make educated guesses based on previous patterns, we can also take this to another level of sophistication where we use proprietary signals. Once we've done this for a while, so we designed a momentum indicator where you can see we got a buy signal here a little while ago, and now we're starting to move to the upside here. We'll get back to this one in a bit. But I think the key thing to understand is that us human beings, we actually behave in pretty predictable ways. We are emotional beings, right? We tend to get really, really excited when it comes to good news, or really quite down when things aren't going so well in the markets. That's essentially happiness or fear of missing out, or greed when things go really well. And then when things aren't very well, it's fear, sometimes outright pessimism. And so if we can take the other side of that, we have a big edge up on most other investors and traders in the markets. And it's actually always one of those debates in the world of technical analysis. Does it actually work because it truly works? Or does it work because everyone's looking at the same levels on the chart? I will tell you that what I just said a second ago, that human emotions is really what this is all about. Understanding human emotions and understanding them when the herd all runs in one direction, at some point it pays to go the other side. So let's take a look at an example. So what we have here is a price chart. This happens to be shares of Disney. We've got a couple of arrows here just to kind of show this a bit better. You can see when we had those down arrows right there, up there, the stock ended up getting overbought and ultimately started dropping very sharply. And then down here, you can see conversely, everyone got very, very bearish of the stock, and it ended up rallying a lot, meaning going up. Rallying means going up. And now as I'm recording this, it's once again getting very overbought. So there's a warning signal now that it might go in the other direction. So what we're really looking at is human behavior, right? So if you think about greed was prevalent here. Everyone was wanting to go for the stock to go higher. Everyone was buying it, but everyone that bought the stock, was already in it, meaning there was no incremental additional buyer. So again, not only does the technical analysis take into account human emotions, but also the emotions in turn reflect how people are positioned. Right? Just like down here, everyone was basically selling the stock. Everyone that wanted to sell the stock had sold it by the time we got down here. And now that we're up here, everyone's once again super positive on the stock, but probably everyone that bought, has probably no incremental dollar to add to the stock right now, at least for the time being. So it's a very, very powerful way of looking at the markets, and it contrasts to fundamental analysis, which I'll show you quickly right now. So when we look at fundamental analysis, we look at a company's things like total revenue, profits, net income. We look at a company
a company's income statement. You know, we can get much more granular cost of goods sold, and of course the balance sheet, which is the total amount of assets and liabilities. And you know, we can go quite granular on this and understand what's the cash flow analysis, where's the revenues coming from, what's the gross margins, all those kind of things. And then we can look at things like multiples. So these are sort of your price to earnings ratios. And things like that, and price to sales ratios, and you know, EV to EBITDA, and you know, it gets quite fancy. So that's looking at a company's fundamentals. That's why it's called fundamental analysis, which is very different from what we said here, which is essentially the technical analysis, which is the price study, or the study, and I should say the study of human emotions. Let's talk about the types of charts. We have something very simple called a line chart, which is what you're seeing here. This literally just reflects the price fluctuation, or the percentage fluctuation of a stock, an ETF, a futures contract, what have you. And then we have something called a candlestick chart. A candlestick chart gives us a lot more information because it tells us on any given day, week, month, 5-minute increment, whatever, where that stock was trading at the beginning of that time period, at the end, and what it did throughout that little time period. So, and then there's things like bar charts, which is something in between. I find candlestick charts the most helpful for me personally. All right, next thing we have is trends. So you can either have an uptrend where things just go up. We can start annotating things. And one of the things about technical analysis, I think it's very visual, right? So you've got an uptrend, and then you might have a downtrend like we had here. And we can define these downtrends and these uptrends sometimes by, you know, as simple as just drawing lines, right? Which kind of draw themselves is what I always like to say, where you can see the downtrends. So we had a change of trend there, right? So very simple trends. And then of course, there are even things like sideways trends. Something might even just go sideways for a period of time. So uptrends, downtrends, and sideways trends. And then we have things like support and resistance. This is just a level where people just no longer are able to buy because everyone bought the stock. Remember we said before, so this is a level of resistance. So we had several attempts at trying to break above there, but as I said before, if everyone that wants to buy the stock already owns it, well, they can't go higher anymore, so we have resistance. And then in this case, the stock ended up falling very sharply, and ultimately, again, we can draw some simple lines to begin with. We found what's called support, right? You can take previous price points like this one here, and you'll find that, well, look, now the stock went all the way down. Well, previously that was resistance until everyone started buying. After a digestion period, more buyers came in, they got exhausted, and look at where the price stopped going down. Well, that blue line, so that's support and resistance. Very, very simple. All right, next thing we have is moving averages. Those are these squiggly lines that you often see on these charts, and the red line here is one such thing. A moving average is nothing more but a smoothed price average over a period of time. Some people like to use a 50-period moving average, or a 200-period moving average, or a whatever period moving average. Everyone's got their own that they like, but you can see how price has history, right? So this is the average price, and you can see when it broke above that red line, which previously found resistance. Again, this is an average level, right? The average price. It then found some support, and then finally broke below it, and then it really kept going. So moving averages are nothing more than that. They're just a reflection of the average price over a period of time, and they can be very helpful for risk management and for perspective. All right, before we continue, remember what I said a minute ago? I said before that technical analysis is nothing more than price history, or really taking into account human emotions. Remember, our emotions are reflected in the markets. Greed, fear, uncertainty, whatever. Now we're going to talk about chart patterns. And charting patterns are nothing more than the fact that we as human beings actually tend to react in predictable ways. And now some of you might say, well, you know, most of the trading these days is done by machines. There's no human emotions there. Those machines are still to a large extent being influenced by the programmers that program them and that tweak them. So keep that in mind. Let's look at some patterns. All right, so remember the patterns we just talked about. Now, you know, when we talk about patterns, we can talk about continuation patterns or reversal patterns. Let's talk about a continuation pattern first. Very simple. You can see this stock here has been going higher, but every once in a while the stock will consolidate for a little while, and then it'll consolidate for another little while, and then it'll keep going, right? and so on and so forth. So these are what we call consolidation patterns. You can see the stock runs up, starts to consolidate, breaks higher above the blue line. Same thing, consolidates, breaks above the blue line, runs, finds resistance again, starts to consolidate. These are what we call continuation patterns. Same thing, and this is a bit more advanced, it's called something called a cup and handle pattern. Not to make you scared of this, but this is nothing more than a longer term cup and handle pattern. You can see it looks like a coffee cup, right? Where you have the base, that's where the coffee goes in right there, and then you hold the coffee mug right there, right? This is sort of a little shakeout pattern, and then it starts blasting higher. And then of course you can have things like topping patterns or bottoming patterns. Where basically in this case you can see you have a double bottom where the stock tries to break below that low, didn't, tried it again, failed, and then goes higher. Same thing on the top side as well. Topping patterns come in various different formats, and again it's all reflection of human psychology, human emotions. In fact, one of my absolute favorite patterns is when a stock has a vertical run, then goes back down again, and then has an even more vertical run, and then completely fails with what's called an outside reversal pattern. Again, not to get too fancy, but if I zoom into this a bit more closely, you can see this particular stock gapped higher and then had a really nasty down day, which is that red bar you see, and then this stock just completely collapsed over the course of a number of weeks. So again, it's all about human emotions.
All right, so now that you have a bit of an idea of what technical analysis is, my honest take, does it actually work? Look, at the end of the day, it's about what your input is, how much effort you put into something. I think technical analysis really works, but it's not about predicting the future. A lot of people think it's about predicting the future, about giving you some sort of certainty. No, it's about improving our odds. The better we can stack the odds in our favor, the more repeatability in success we have as traders and investors. It's not about predicting the future. There's not a crystal ball, but it does allow us to do better risk management and enhances the probability of more profitable trades. That's my view. I'll give you another couple of points. I wrote them down here. So technical analysis for me personally, it really helps me visualize crowd behavior, as we said before, human emotions, and ultimately momentum. Whether a stock is just beginning to go up or it's about to reach the limitations of what it might do. It allows me to be much better in exactly timing where to get in and where to get out. Discipline. I think disciplined investing and trading is what makes a difference. That's what sets the profitable traders apart from the ones that tend to struggle. Lastly, technical analysis can be used in all time frames. So you might be sitting there right now and say, you know what, I have a job and I just want to do a couple trades a week. Can you do that? Yeah, it's called position trading or swing trading, right? Yeah, of course technical analysis works. Those are your multi-day, multi-week positions. If you say to yourself, I want to be a day trader, I want to do this all day. Does it work? Of course. If you say to yourself, I'm an investor, can I use technical analysis, maybe in conjunction with fundamental analysis on my investing activities? Absolutely. It's a big part of what we do. So how do you get started with technical analysis? What are sort of the first couple of steps? Well, if you haven't started with trading and investing yet, I think a great way to start is to actually get a broker platform or some sort of a charting platform so you can start practicing. Remember, practicing makes perfect. Doesn't matter whether it's investing or trading or being an athlete or being a cook. Doesn't matter. Number two, I would learn a couple of indicators. And I say a couple, not 10. And I'd keep it simple. I would learn how to read support and resistance areas, and I would learn how to use very simple moving averages. We talked about both of them here in this video right now. The third thing I would do once you've gotten past those two initial steps, I would learn some very simple patterns, continuation patterns we talked about, patterns where the market might be topping or bottoming. Very important. And then step four, I would practice with a demo account. So don't go out there and dig up all your savings and start trading. That's silly. This is a very serious endeavor. We're playing with real money here. So before we play with real money, I suggest play with what's called a demo account. If you go to your broker, you ask them what that is, they will tell you. It just means you kind of get fake money. It's kind of like Monopoly, and you can trade with it. It allows you to practice, to test, to back test, and just get a feel for how all this works. And once you feel comfortable, you might start building an entire routine out of this. Like this. So I like to have this dashboard that I create in the morning. This looks like a lot. It's really not once you know how to do it. But I like to know what different things are doing. What are stocks doing? What are bonds doing? What are different currencies doing? And so on and so forth. And once we have that, we can start going in and doing technical analysis based upon the entire market and see how things really come together. Okay, and now I'm going to show you my absolute favorite indicator. It's momentum driven. It's momentum driven. So you see momentum in the markets is something that can kind of, snowball. It can kind of grow on its own. Meaning once a stock, let's say, starts going higher and the machines, the computers, and all sorts of other people find it that it's going up, they might all topple upon each other to buy it until everyone's bought it. But to be able to capture that momentum, that is part of technical analysis, we can play that. Let me show you. It looks like this. So you can see here, for example, this is the S&P 500. It's an ETF in this case. And you can see I started getting a sell signal. If you guys can see that little red down arrow. And you can see from that point on, so as soon as I got that signal, not only did I receive a profit target, which is this green dotted line down here, but also at the same time, I received these red dots, which is basically my stop loss, which basically means when I want to get out in case I'm wrong. So if I were to say buy a put option or short the S&P or just make some sort of a bet that it goes down, this up here would be my absolute worst case scenario loss. And down here we have the profit target. And you can see how that ultimately worked very well. And now, we showed you before, we're getting a new buy signal. We've got our stop loss here, and we've got a profit target up here. I like it here. It's a good setup, actually. One of the things that you can also do is join us in the mornings. We do something called the Set the Market Morning Call. It's completely free. It's on YouTube. And I show people ideas every morning during the week that we really like, both from a fundamental perspective, from a technical analysis perspective, and others. In fact, we had a trade here. I'll show you this one. This is a trade that we showed as an idea in our Set the Market Morning Call on YouTube, where we, based on that momentum trade that I just showed you, received a buy signal in a company called MicroStrategy Inc. It's the ticker symbol is MSTR. It's up there in the upper left-hand corner. And you can see how that stock ended up moving sharply higher, again, with a trailing stop and the profit targets up there. So that's the kind of stuff that you can expect and set the market. All right, so look, technical analysis is not a crystal ball. It's a tool, but it can dramatically help you improve your trading odds and define your risk. And that's really what this is all about. What I would like you to do is subscribe to our YouTube channel and follow us along, and make sure you join us in the mornings in our Set the Market Morning Call, where you are able to join us as we live analyze the market, give you some ideas that you might want to look at yourself. Click down below and we'll see you there. If this video helped you, please make sure you subscribe to the channel, you give us a thumbs up like, and if you want to see this approach in action, you will want to join us in our Set the Market Morning Call, which happens at 9 o'clock Eastern Time, Monday through Thursday. Make sure you join us for that in the link down below. Again, subscribe to the channel. I'll see you in the next video.